Okay, so today is 2019, October 28th, right? So let's start from the gold. Okay, so the gold has been sideways for almost the 2 week. Okay, 2 weeks. The gold has been sideways from 1470 to 1507. Okay, and then last Friday, there's a pin bar rejected from 1515, which is 618 retracement from the last downtrend wave. Okay. So hence we can actually see that the 1506 has a lot of rejection from here, and there's a pin bar telling you that there's a lot of selling pressure. So today is Monday, and we will see this drop, and it breaks the bottoms of the pin bar. So that's selling opportunities when you see this happens, because after selling pin, this is called a selling pin because the pin is facing up, right? The price actually dropped below the head of the pin, so that's actually confirmation of this bearish movement. So in 4-hour chart, you can see here, right now the gold has already broken the 1500 even handle, and that's why we're going to use this as our trading opportunities to sell from here. Okay, in daily chart, we can see here there's a trend line from the recent sideways move, right? So it is very important for us to observe that whether the downtrend can break this trend line or not. If the breakout is successful, so we're going to expect more downtrend move to 1450 here. Okay, so watch this breakout to happen, all right, and wait for sell the pullback. Are you clear? Are you clear? So this, because this is daily chart. Okay, daily chart, the trend line was very important, very critical. Okay, because from October 1st till the whole month, you can see the whole month the gold has been supported from this trend line. Okay, so if this trend line was broken, we are definitely going to sell the pullback of this retest and aim further lower. Okay, because this is a very, very strong selling signal of this here, the pin bar plus a bearish engulfing candle. All right, so let's go to the 1-hour chart. Yeah, Russell says there's a ABCD patterns. Yes, you're right. So we can see here, this is the AB move plus here, this is a CD move, right? So if you want to trade this ABCD move, which direction you pick? Because this ABCD move is actually a bearish movement, right? So after the ABCD move, the price may rally from here, okay? So you can anticipate the price will have a rally to 0.382% or 0.618%, okay? So it's okay for you guys to capture or buy first, okay? This is a buying opportunity of this ABCD move. And when the price reaches to 1501, you close some position. When the price reaches to 1507, you can close all. And then find the 618, use the 618 to sell the pullback. Okay, so in 1-hour chart, we find long buying opportunities, and in daily chart, we find your selling opportunities. So both of them are okay to trade. Okay, yeah, and you look left, right? The 1490 is actually very, very close to the origin of the last bullish move here. So you can use this as a very important structure, okay, for you guys to place a stop loss. I have been emphasizing a lot of time that the place a stop loss is very important, because stop loss will help you to reduce your further damage, okay? And also, a good stop loss will actually tell you whether you should hold the trade or not, okay? Think of this, right? We see this strong rally, right? This is a strong rally that we saw, okay? So the only reason that we are going to buy the gold is because right now the price hasn't break the new low, okay? If the price break the new low, it actually gives you a bearish direction. That's why we are not going to hold our buy position anymore if the stop loss was touched. Do you agree? All right, so that's why we should put our stop loss at 1487. Okay, because if 1487 was broken, no matter what, there's no excuses because the price really made a lower low. So a lower low actually is already violates your buying plan. Okay, so if you can understand of this, reply me by 9, because I explained that if you want to buy the ABCD pattern, yes, you can go for it. However, you should put your stop loss right at 1487 because we don't want the 1487 to be broken. Okay, that's the only reason that you should hold for this long position is in the condition that the price will not break 1487. Okay, and hence you can measure the risk and reward ratio from this trade, right? Say for example that we buy from 1493 right now, okay, and we are risking for about $6, okay, as a risk because the price already rallied, right? Okay, so this is our entry, this is our stop loss, and if our target is at a 618%, okay, you can see here the reward and risk ratio is about a 2 to 1, okay, and that is acceptable. Okay, that is a good reward and risk ratio. Okay, so you can use this ABCD patterns plus the structure to enter or buy, and it will be even better that the 1 hour chart can form an inside bar breaks out. Okay, for those who cannot hear, please set for default choose computer sound. Okay. All right, so this is a 1 hour chart intraday buying plan for the gold. Okay, our aim is at a 1505 and a 1501 and a 1507. And when the 618 was reached, we want to take a sell because in forward chart the price is very bearish. Okay, already made a lower low, and if there's a pullback, we can take a sell. In daily chart, we are waiting for this trend line to be broken. Okay, this is a trend line. We're waiting for this to be broken and to sell more if the downtrend started. Okay, so that's the whole outlook for the gold, and I have already helped you guys to identify the 2 very important zone, which is 1492 to 1490 as a supporting zone, and 1507. Okay, 1507 to 1504, this is a selling zone. Okay, so you can make use of these 2 zones for you to either to catch a buy or for you to catch a sell, or you can do both. Are we okay? So do you think this plan was very clear? Yep. So if you already agree with the plan and understand the logic of the plan, yeah, let's do it. Okay. Okay, good. Let's move on to euro. Right. The euro has a strong rally for the last 2 weeks. The price moves to 1.1179, and the ECB president Draghi has already announced that will be the last session for him, right? So, and then the euro actually have a drop. Okay. Okay, we have to identify why the pivot point occurred at 1.1178. So we have to look left. Okay, we have to look left. And when we look left, something very, very amazing appeared. Okay, we can see here 1.1177 is right at the supporting structure of this series of candles. 1, 2, 3, 4, 5, 6, right? There are 6 candles sitting above at 1.1177. And at that time, the euro is supported. Okay, and then the price broke this supporting structure. Okay, and now the structure becomes a resistance structure. Okay, and we see a bearish move from 1.117 to 1.1095. Okay, so what does this mean? this tells me that, okay, the sellers, the institutional players are selling euro from 1.77, okay, because they want to sell last time from here and the price moves too fast, so they have to sell again. And there are a lot of buying positions are trapped from here, and now they have a very good position for them to cut loss or escape from the loss, so they have to sell from here as well. So there are two forces that join here to sell the euro from 1.17. That's what we saw from the last 1, 2, 3, 4, 5, the last week. Okay, so if this is the first downtrend wave, what will happen next, right? Because what we see, okay, what we saw is already happened, but we have to do something, okay, to join the next move. Okay, so how does this work? Okay, so we have to use the tool of Fibonacci. Okay, we draw a Fibonacci line from the previous high to the low here, and okay, something amazing happened again, because this is a 618. This is a Fibonacci 618. You can see here. Okay, right. 618 at 1.1138, and look left. All right, there's a structure here, because this candle was telling me that the euro has a support from 1.1139, right? And then this place was broken down and retested. Okay, so for the euro, we can make use of the 618 level. Okay, just similar as gold. Okay, wait for it to pull back to here, and you take sell from here, aim the previous low and even lower. All right, that's highly possible for this trade. Okay, and all you need to do is put your stop loss above 1.1184. Okay, yeah, just put your stop loss here, right? Because we don't want a new high to be created. Okay, so sell from 1.1138, stop loss at 1.185, aim 1.1080 and 1.10. Okay, that's for the euro. Okay, so any questions? No questions. We're going to move to sterling. Okay, the sterling is something different, because sterling has already broken this neckline, and now the sterling is sitting above this neckline. So for the sterling, I want you guys to buy. Okay. Okay, maybe you have a question for me that, oh, hey Jack, you are selling euro and at the same time buying sterling, right? What are you doing? Aren't the euro and the sterling highly correlated? Yes, usually it is. Okay, so think of this. If I'm selling euro, okay, selling euro and buying sterling at the same time, what am I doing exactly? Anyone guess? You can reply me from the chatting window. If I'm selling euro dollar and buying sterling dollar at the same time, what I'm doing? Which pair am I trading? No, it's not a hedge. Simply that I'm selling euro sterling. Very simple, because you have to understand the formula of the FX. FX is the currency A. Okay, currency A divide, okay, by currency B. This is FX ratio, how it works, right? Okay. So what is the ratio of euro sterling? Is the euro is a dividend, the sterling is a, you know, the sub dividend, right? So I'm selling euro and I'm buying sterling, okay, which means I'm selling euro sterling. Okay, you can think of this. Euro dollar is euro versus dollar. Okay, so euro divided by dollar. All right, let me just put this. This is euro dollar, right? Okay, and then I'm doing sterling dollar buy. Okay, I'm selling euro and I'm buying sterling, so I should put these two things here. Okay, and this is a mathematic formula. Okay, so I flip the subdividend here, and this formula will transform to a new times will be transferred from to here, right? You understand? This is mathematical conversion. Okay, so this is what I'm doing. All right, I'm selling euro and I'm buying sterling. I'm buying sterling, right? So if I flip this up, okay. Oh, sorry. It actually will be USD is at the top. Okay, it'll be something like this. And you know the US dollar will just cancel each other. Okay, which means I'm actually doing what? I'm doing selling euro and buying sterling. Okay. Yeah, you will be very surprised that, oh my God, there's a mathematics in Forex market. Right? And this is right. We have to understand from this, because that's the basic, that is the origin of the currency world. Okay, you are selling, I'm selling euro, buy dollar, and at the same time I'm buying sterling, selling dollar. Okay, and I transfer this, right, where I'm doing selling euro, buying sterling. Okay, and is a euro sterling at a bearish trend? Yes, it's bearish. Okay, new has been created. Okay, price drop here. Okay, this is first wave, pullback, and a break new low. And is there any other room for the euro sterling to drop furthermore? Yes, it is, because from the ABCD move, I can tell the euro sterling will have a what? Have a projection at 0.8470, and that is the lowest point of the March price. Okay, low of the March. So still have this move, right? About 120 pips for you to catch of the euro sterling dollar move. Okay, so that's simple. That's why I'm picking euro sell and buying sterling. Maybe I will be wrong for one of the trade, but definitely I'm going to win from one of this trade. Okay, maybe my euro dollar is going to lose, but my sterling buy, we're going to earn more money of the euro dollars lose. Mass 101. Yeah, but that's the thing. That's it of the FX world. You have to understand the FX until this stage, right? Alex says this is blowing your mind. Yeah, because seldom few people will think this hard of this FX world. They just think, oh yeah, it's going up or going down, on selling or buying, but less people actually think of this. They want you because I'm an engineering student, so I'm very familiar with the formulas, and my mathematics is still good. Okay, all right. So from this chart you can see my purpose is to capture this move, right? This 120 pips move, and maybe even lower. Okay, so what will happen for these two trades is my euro sell, right, may lose, right, if the euro go up. Okay, however, if euro go up, and because the sterling is stronger than euro, the sterling will go up more, right? That's why my GBP USD buy trade or long position will earn more money of the loss. So that's the whole idea of this trade. Yeah, some people say this is hedge. Yes, you're right, but you have to understand how this hedge works. Okay, if the euro sterling, if the euro dollar goes up, my euro short will lose, right? Definitely, will hit my stop loss if the new high was created. But the sterling dollar will move higher than euro if the euro sterling is bearish, and that's why my sterling dollar long position will earn more money than the loss, right? It's not off the loss, it should be more than the loss. That gives me the conclusion. What is the conclusion? Conclusions, right? Still a net positive profit of these two trades. That's why you should take it, right? You should take. Okay, because there are a lot of lecturers, or there are a lot of you know, the forex gurus, right? Telling you something, trying to help you to pick the directions, help you to understand what is the forex or technical analysis or fundamental analysis, right? But I actually want to educate you guys about the mindset, right? The correct mindset and the correct mind map, how you should think correctly, think smartly, and think systematically. Okay, so in the next time, right, when you want to take your own trades, for example, you want to take the Aussie, right? For example, you find a bullish pattern. Okay, sometimes you will actually feel into the same problem that I'm facing now. Okay, let's say, okay, question. Okay, I'm just telling you a question now. Okay, see whether you understand the situation or not. Okay, first of all, you find a bullish pattern of Aussie dollar. Okay, at the same time, you find a bearish pattern of Kiwi dollar. So Aussie is a buy and Kiwi is a sell. My question is then, what will happen? What will happen on Aussie Kiwi's chart? Okay, what kind of trend should the Aussie Kiwi be? Anyone can answer this question? If you can answer this question, get the correct answer, and then it's worth for you to take in today's webinar. Yeah, you want to buy Aussie and sell the Kiwi, right? Aussie is a buy and Kiwi dollar is a sell. So what will happen of Aussie Kiwi chart? What kind of a trend should the Aussie Kiwi be to support your two trades? Because you find a bullish pattern for the Aussie, right? Definitely you want the Aussie to be strong, right? You find a bearish pattern for the Kiwi, definitely you want the Kiwi to be weak or weaker than the dollar. So Aussie Kiwi should be, the correct answer is what? Aussie Kiwi should be in a bullish trend. Because if the Aussie Kiwi is in a bullish trend, the Aussie is greater than Kiwi, right? So no matter what you do, if your Aussie buy is a winner, the Kiwi dollar, maybe it will not win, we will have a small loss, but generally speaking, the Aussie is still stronger than Kiwi. That's why you're still going to make money. Bullish, yes. Okay. Can you use COT reports to gather the dominant directions? What do you mean? What is the COT reports? I don't understand. To have a better answer, you should be good to show your view on DXY. Yes, for the dollar index, okay, yeah, that's a good question. You can check the dollar index. So the dollar index is in a bearish move plus a correction move, right? However, it is still support from 97, supporting from this low, okay, and the high is here, okay. So it is easily for the dollar to gain another strength to here, maybe. Okay, or the dollar may break down, but generally speaking, now the dollar I will taking is as a sideways, because this series of candles, okay, this series of candles didn't break new high, neither did it break new low. So dollar is in a sideways. So when the dollar is in sideways, what will happen to the major pairs? It may diverge. Okay, maybe sterling will be stronger, or maybe euro will be stronger. It's really up to their own charts, own performance. Okay, but the dollar is in a sideways. That is actually a supportive evidence for us to take a sell of the euro because the dollar may go strong. However, we can still consider to buy the sterling because sterling is stronger than the euro. Okay, and if you want to see more convincing evidence, you can go to the finwiz.com. Okay, because the finwiz.com that has the Forex performance tools for you to look at. Okay, you can choose the Forex and then go for the performance charts, performance here. Okay, so from this chart, you can see here in 1 day relative performance, the sterling is definitely the top. Okay, number one, the euro is lesser than the is weaker than the sterling, right? But that is only 1 day for this Monday. That didn't really give you a good idea. But you click for the week, right? Still, the sterling is up. Go for the month. Sterling is is outperforming euro by 3%, 3.3%. So from this, the monthly relative performance and the weekly relative performance, do you think this the sterling is stronger than euro? Do you think so? Oh, complement of trade reports. No, you can use the COT reports for future markets or for the stocks markets, right? Yeah, generally for the commodities, but not for the Forex. Okay, use the COT reports for the commodities. Okay, that would be better, like gold or crude oil, right? So here is the evidence, right? Is whether it's a daily relative or weekly relative performance or monthly relative performance, the sterling is really the number one currency, strongest currency in this world right now. It's definitely higher than the euro. That's why the euro sterling keep going down. So this is the trend, right? This is the trend. That's why if we want to buy the sterling and sell the euro at the same time, that is profitable. Okay. So do you understand? So that's why, yeah, today I just show a lot of telling you guys how you actually choose the cross pairs. Okay. If you want to choose a cross pairs, you should actually pair choose one currency that is relatively stronger and choose another pair that is relatively weaker and compare this and link these two as a cross pairs, right? Some people want to they always want to trade like the Aussie Canada or Kiwi Canada or like Canada Swiss franc, you know, there are, because if you choose all the cross pairs, okay, there are about 40 plus, okay, pairs for you to choose. That's too much, okay? But how you know which pair I choose will be the, you know, the most effective one? You should look at the performance, okay? So from the monthly point of view, that you see the sterling is strongest, the yen, right, is the weakest. So you should actually trade sterling yen, right? The best trade should be you're picking a sterling yen buy 1 month ago, okay? Because this is 1 month relative performance. That is, you pick a sterling yen buy from end of September and you hold till now, you have a lot of money, right? However, if you choose Swiss yen and you also buy the Swiss yen, it will not give you a lot of money, right? Because Swiss yen only, you know, outperformed by yen by only 0.4%, which is 40 pips. So do you understand what is the principle for you guys to choose the cross pair or not? You should choose the strongest pairs with the weakest. Okay, but this is actually a dynamic performance chart. It will change. So that's why you should also observe the weeklies, right, and the daily, okay, for you to consider. And if you can watch the charts, for example, I choose the Swiss yen, right? You can see, yeah, there's a lot of rally. Okay, you think, yeah, the rally is very good, right? But it only rally from 106 to 109 only 300 pips. You go for sterling yen, you look at this performance move 130 to 140. That is 1,000 pips. So understand? Okay. And that's how smart people choose the correct cross pair to trade to enjoy the most effective profit, because your account can only maybe allow you to trade 2 or 3 pairs at the same time. Otherwise, you're going to be overtrade. And the question is, which cross pair you choose? You can use the same lot size, but you can win more money, all right? Or same profit that you can have less risk. Okay, give me 5 if you understand the whole logic of here of this today's webinar. All right, so I hope that it works. It helps you to be more have a clear mind, right? For you guys to think which pair you choose, right? Or the relative performance between each pair. Okay. All right, let's move on. Let's check the Aussie. Okay, the daily chart Aussie has made of bottoms. That is very clear. All right, and just in my last view that I want to, you guys know that I'm bullish for the Aussie for this 1 month, right? I tell you guys to buy Aussie from here, the 618. Okay, this is 618, right? Very nice buy, and I tell you guys to buy it one more time when a bigger 618 touches, right? So all these two 618 trading opportunities were given, right? If you hold the 0.67 long until now, right, you win about 160 pips, okay? And now the Aussie is sitting right above the structure here. So what is the patterns that we're looking for? Yeah, the breakout and pullback strategies, right? So you should actually consider to buy the Aussie again from 0.6810, and your stop loss should be below this bullish bar here, about 0.6774. So that will be about 40 pips, okay? But the reward will be quite fruitful because the Aussie may rally to 0.7. All right, this is an ultimate target I'm looking. Okay, so try your best to capture this uptrend move, right, by using all the patterns that I teach, all the patterns that I shared, right? The 2618 or inside bar breaks up or structural breaks and pullback or 618. Okay, can you do on dollar yen? Yeah, sure. Dollar yen for the whole from September, okay, from September 4th, I actually shared my view in dollar yen that I want to buy. Okay, here, this is a last in August 27th here. I said when the dollar yen breaks 107 and pull back, you should buy and aim for 111. Right? Let's just see what happened. Okay, so the dollar yen really actually break here and make a pullback, and now it's 108. All right, so there are still 200 pips move. Sorry, 200 pips move because 109 to 111 is 200 pips. Okay, so you can buy the dollar yen still, right? It's making a higher high and still in uptrend. Okay, so buying the dollar yen. Okay, laboring or dollar yen, yeah, it is. You're right. It is definitely a liberal patterns. Okay, that's why I'm telling you to watch this 107 place for you guys to buy. You see, this is a structure previous as resistance, breakout, and pullback becomes support, right? And now this is here you can consider as a triangle. Okay, this is actually a trend continuation patterns, right? An uptrend followed by a continuation, and then it will go up. Okay, and aim for this gap. If daily closes above 108.9, it's making new high tonight daily. Yeah, I mean that is daily close, but you don't have to use the daily close to confirm the bullish breakout. You go to 1 hour chart, you can see, right? In this 1 hour chart, what is the recent structure of the sellers? It's here 108.80. Okay, the bullish candle, the Marubozu bar has already already closed above here, 108.80. For me, I will use this as a bullish signal already. I don't need to use this daily candle to close above 108.90 because it's definitely a very strong bullish trend. Otherwise, you won't see this Marubozu bar here. Understand? So because if you use a daily chart closing to confirm the bullish trend, you should take your trade to tomorrow, not today, right? But for me, the critical candle is this one, okay? It's what happened in just 2 hours ago here. I mean, this candle breaks the 10.80, and if the price can sustain above 1.108.80, I will definitely be a buyer for the dollar yen. All right, good. Here comes for dollar Canadian. Okay, the dollar Canadian makes a bearish move very sharply. And if you remember, I said you should pay attention for this 618 level for you to sell, okay? And it actually has a broken up here, but did not break new high. And then you can see here the structure still works. Because after a 4-day, or supporting, right? And finally, of this candle break this structure, and that's why you should take a sell from here from 1.33, okay? And then you can enjoy the whole bearish move. And now the dollar Canadian break this point, okay? So 1.3136 is very important because that is the last origin of the bullish move from here, okay? So what we can expect is now this place is become a resistance area. So find a pullback when the price work close here and sell. Now you don't take this Gardy Madhan, okay? Because you should actually avoid to take the harmonic patterns here when you think that when you find the X point, it is not at the bottom. What do you mean is what I mean is, look at the chart in a big picture. Do you still think this X point is at a low place? No, right? The lowest place, I mean, from the year 2017 is 1.20. And how strong will the 1.30 area to hold the price after so many tests? I don't think so. It will become a neckline, a potential neckline of this multiple top. So you have to bear this in mind that the X point should be a place that is very, very strong, not some place in a potential neckline. Understand? So I won't suggest you to take this buy of this Gardy pattern because most of the, I mean, maybe 70% or greater than that, the chance this Gardy will fail because the X point is not very strong. If you look at here, right, the whole dollar Canadian move is still in this upside move from 1.20 to 1.36. Okay, that is a huge move of dollar Canadian. And then the price have a correction, the first correction, a pullback, another correction, and a pullback. What do you think? It's actually a lower highs and lower lows, right? So it actually in a very big bearish channel, and you have to ask yourself a question that will the dollar CAD drop to 618? Is it possible for this to happen? If the oil goes strong and dollar Canadian, the Canada dollar moves strong as well and it's dropped to 1.26, that's highly possible, right? Okay, so now the bearish trend already starts. It has already broken the trend lines, right? The trend line was broken, the structure was broken. So I don't suggest you guys to pick the Gardy buy. You should actually consider sell higher to capture this wave, right? Okay. Okay, look for the oil. The oil has a very nice rally. I think the oil buy is we capture a lot of money from the oil because we take these Gardy patterns of the oil and we take the 618 buy from the oil as well. Right? That's a plan that I shared in my students group, right? And the oil has a strong rally last Wednesday, okay? And now the daily chart, okay, the oil is still bullish because it is the double bottoms was confirmed. Okay, this is a daily double bottoms. Okay, you can wait for the pullback to buy at the neckline. That's definitely okay, wait for a pullback to buy, okay, or you can wait for 618 to buy, okay. But however, I don't think the oil will pull back to 618 if the 56 level is supporting the oil, because this is already a rally base rally, okay, a rally base rally, and it's a pullback. If the oil can stay above 55.54 after today's red candle, tomorrow should be a green candle, right? That's highly possible because it actually gives you a trend continuation, uptrend, sideways, another uptrend. Okay, so for the oil, try your best to find your patterns to buy the oil. Okay, and in 1 hour chart, you can see here, yeah, this is the last wave of the bullish move, last wave, right? So we can use this Fibonacci level here, and you can see here right now the oil touched the 618. Okay, so you can use the 618 for you guys to capture a buy of the oil and then put your stop loss below 55.50. Right, that's enough. Okay, and maybe there will be another upside move and even break new high because it's still in an uptrend move. Right, that's the view for the oil. Okay, daily chart is bullish. 1 hour chart is retesting the 618, so you can consider to buy the oil again. If you have some position here, I mean, you win a lot, win about 300 pips already, right? So take some profit and buy the low from here to enjoy the next move. And generally speaking, I think the oil is going to at least going to touch the 618 here of 58.61. So I will close some profits of my long when the oil moves to here, okay, 58.55. Okay, all right, go for the S&P. Okay, the S&P makes a breakout today, so there's no more selling for the S&P. So my last bearish trading plan, this trading plan was completed because it has already finished 2 targets. Okay, and it should close two-thirds of the positions, and the rest was taken as a break even. So now there's no more short of the S&P. But what you can do is you can make use of the structure and to find a pullback to buy, because the S&P definitely breaks a new high. It breaks all-time high here. So watch 3025. Watch this 3025 to buy. It will be a highly appropriate trade. Okay, so S&P bullish, find pullback to buy. That's very simple. Okay, go for the Bitcoin. The Bitcoin has a very strong drop last week, and it hits the 618 here. You can see my projection was very accurate. I told you guys that it will go to the ABCD's completion at a 7540, and right at this 7540, it actually has a daily inside bar breaks up. And for those people who take daily inside bar breaks up, you win a lot of money, about $2,000. And then it actually has tested the previous structure here of 10K, to be here. Okay, so for those who selling from here, from 10K is also making some money. Okay, because the price have a strong rally and then a very nice pullback to $8.09. So and now the Bitcoin is sideways from this range. But my suggestion is do not chase a price. Do not buy right now. If you want to buy, I'm going to give you the guys this area. Okay, wait for 8,700 or 8,800. Okay, and use the Fibonacci level to give you a more insight. Okay, yeah, 84557. Okay, so wait for the Bitcoin to drop here. 8.5K to 8.8K. Wait for it to drop here and to have a buy. Okay, next buy here. That is the view for the Bitcoin. For the LTC is similar. So wait for the price to come to I think here 56. Okay, we may test this place again. And use the 618 as well. Yeah, it tells me, okay, maybe we'll come to 53.64. I don't know. However, I mean, do not chase high. Okay, do not chase high. Wait for pullback. Okay, it is a beautiful pattern that is the price break the downtrend channel and have a pullback of a 618, that will be the best buying level. Yeah. So LTC 53.64 to buy. Okay. And for the Ethereum, yeah, similar, about 172, I think. Yeah. Wait for the 618, 170. Yeah. So 170 is a good place for you to buy some Ethereum. All right. So that's all for today. I think I've covered a lot of the markets, and for the gold, you remember, all right, you can buy now and see whether you can go for 1500 or 157. For the oil, it's bullish. Okay. Trying to find a pullback to buy the low. Okay. Use this green candle as your mother candle. Okay. For you to put a stop loss below 55. For the dollar yen, it's upside. Dollar yen, okay, it's upside move to continue to buy. For the sterling, it's also a bullish move. For the euro, I'm telling you guys to sell the high. Okay, sell high from 1.1137. For the dollar Canadian, same. It's also a sell from the pullback from here 1.3130. Okay, so that's I think all for today, and hope you guys have a great webinar today. And if you want to learn my course, you can go to harmonicasia.com to sign up for the 2 days course. It's actually already captured in this all the training videos are recorded very well, and you can learn my course from online and join my students group as well. Okay, and I will teach you guys how to trade professionally and earn the money from the market. Right. So by the way, I want to also show you some a real performance, okay, from my trading results for the last 2 weeks. Okay, so you can see here. Let me just put in my screen. Okay, so this is a statement of my MT4. Okay, from my own can see here, this is my own names, my real account. Okay, and this is sorry, not this one, should be here. This is a chart. Yeah. Okay, so you can see here from this chart that oops, there's a graph detail statement. Okay, never mind. I'm just going to use the picture. All right, it's here. So this is the trade that I took from the 2019 October, the last month, right? This month, yeah. From October 3rd to October 25th, my capital was at 20K, okay, 20K, and the final figure for my performance is 37K. And the highest winning products is the oil and the sterling yen, okay. So this is the chart growth, okay. So you can see here, total I take 100 trade. My profitable trades is about 53.77, which is the winning ratio is about 53%. My average risk and reward ratio is about 720 versus 484. So a little correction from here, okay, a little correction from here, but then especially for the last week, because the oil has a very nice rally, and the capital actually grow from 20K to 73K in the final. So that's just how my performance in the last months, right? And I have another one that is here. Is in September, okay? Yeah, in August, yeah, just the second last month here. So in August, I made a 20K from this 20K account. You can see here, okay, the capital was 20K, and I sell the sterling, the gold versus sterling made a 4K, 3K, and the sterling yen totally made 20,000. and then I withdraw this 20,000 cash. I withdraw it, and then I made another 1.6K from this trade. Okay, so this is a withdraw. This is the growth of the account. So now the account has already grown from 20K to 50K. Sorry, 56K, because in the total profit will be 36,000 for the US dollar just in 1 month's time. And all the in just 2 trades. Okay, the sterling yen trade and the gold sterling trade. So what I'm sharing this is just want to tell you guys that there's no such thing that you can only by making thousands of analysis to become a good trader. Okay, the best way is to trade the markets, to participate the trend, participating every single trade that you spot, and you have a very good report or good journal to summarize your failure, to summarize your success, and put all of them together and see the total winning ratio. Okay, just like this, you can see the total winning ratio of this August is very awesome, right? There are only 27 trades. Okay, however, the winning ratio is about 88%, and the risk and reward ratio is 1,005 versus 388, close to 5 to 1. And that's why, I mean, I made 36,000 profit in just 1 month. Right? You can see this is how high quality trades looks like, and you guys should be working towards this level to enhance your trading performance. Right? That's the last thing I want to share. All right. Okay. So can you please share some statement on WhatsApp? No, I cannot access WhatsApp. So I have to ask my students in the WeChat group to copy my statement to WhatsApp. Yeah, I'm trying my best to use a VPN to connect WhatsApp if I can. Okay. All right, and I will upload the webinar today, and you can find it in youtube.com. Yeah, just I will upload to YouTube, and you can go to see in the channel of Projack's channel, and then you can find more of my videos here. All right. All right, good. Thank you. So see you next time. Bye bye. Yeah. Good luck, and see you next time. Ja, Projack, euer Goldman Sachs ist euro 60, right? Deutsche Bank